are back with another video where I'm going to be talking about my trading process from this week. This is going to be a very interesting week, to say the absolute least. We're following up on last week, which was extremely volatile. Everyone knows it's being driven by news. So it's a really interesting time in the market, and I have a lot of questions of people asking me, how are you going to approach this? How do you trade it, if anything at all? And I'm going to be really showing that, especially in this video. So today is Monday. I'm not trading Monday anyways. I think it's super important to let this day go. I mean, the market is acting crazy right now as we speak. It's rallying, I think, over 1,000 points from the open. So really crazy stuff that is not normal. So I'm staying out of this for now to see if the market cools off or is at least going to offer a valid setup. And that really leads me into how I'm actually approaching this. There's probably two things that I think are super important. The first is that in a market like this, when things are not the usual, the volatility is extremely high, you have to be super cautious. That's really rule number one, but it doesn't mean you get to stray away from your system. Your model is your only attachment to consistency in the market. Anything outside of that, it means you're trading something you don't know, or you're just trading based off of hope. So don't let the volatility draw you into something that you don't understand. You're going to follow your system as you always have, and that's what you're going to be looking for. That's what I'm going to be looking for. The second thing, when the volatility is extremely high, the one thing you have to adjust is your stop loss and the way you are entering your position with contracts. If you are used to using, let's say, a fixed point stop loss on NQ, you usually take 10 point, 20 point, maybe even 30 point stop losses consistently. That is not going to work in this market. The volatility is too high. It simply will not work. You have to adjust to the amount of points, because your stop loss in something like this may be 80 points, 100 points. You're going to have to size down your contracts to adjust to make sure that your dollar risk is staying consistent in a market like this, so your risk management is controlled. That's the next thing that is extremely important. If you can bring those two things together, be extra cautious, be ready for the market to not do what you expect, because there's a lot of external factors coming into this. So be really controlled in risk management, adjust your stop losses, your position sizing, and trade as you normally would. You're looking for your model. That's all you have. So that's what you're going to be looking for. So this is the market right now. Everyone is probably watching this already, but really large range on the day, super volatile open. This is straight news driven market. I'm not touching this, but I will always check tomorrow to see what did Monday do. Is that offering me any idea for Tuesday?
Whoa. Yeah. First order business, dog, I gotta thank my mama. Second order business, shed a blessings, no more trauma. Third order business, do good decent, get good karma.
It is now Thursday. I skipped Tuesday and Wednesday because I didn't take any trades. I am going to cover that for you here soon in the charts, but it's been 2 days of me doing nothing, and that is okay. Just like I talked about before in the beginning of this video, if there is nothing presented in the charts for my system, then I'm not going to be trading. There was a lot of news the past 2 days, especially on Wednesday, which did not align with anything that I understand. The market is moving large, but that doesn't mean that I have to be participating. It doesn't mean that you are going to make money, so I am staying out of the market in those times. But I'm going to recap why I didn't have a trade on Tuesday or Wednesday, and then also the trade that I took today on why I'm short. So to quickly recap why I didn't trade on Tuesday or Wednesday, we're going to start here on Monday. I'm always using how Monday prints on the chart to act as a gauge for what I should do on Tuesday and the days following. This is Monday's range here. Of course, when I look at this, the only relevant level would be previous week low. We do run that out, but the way that Monday trades, it doesn't offer me any added context. If I take a look here inside Monday's candle on the hourly, let's take a look off the lows. Did any reversal establish off the lows that I can trade away from? No. We look off the highs. There is no established reversal off this high. So that means this is acting as a range where I'm going to mark out the highest high and the lowest low and wait for price to engage there. Internally, I'm not going to mess with it because there's no context or no reasoning to trade in either direction. Here on Monday, we open up. It trades into previous day high, which of course is meaningful because this is acting as a range. However, at this point in the day, I'm slightly hesitant to trade this reversal where price has made a large run away from that opening price to get into that high and then broken down lower. I will admit that due to the volatility, this is likely something that I don't need to be too concerned with, but this isn't really a trade of interest for me. If I'm going to trade the reversal day, I'd like it to be really quick, a shallow run from the open and likely turning at 9:30. If we, take a look at this, we put in a high around 10:15, start to break lower. The only place I'd actually have an entry is at 12 o'clock. And to me, taking an entry or an initial position there, it's just a bit late in the day and it's just not the trade for me. The logic plays out and I understand why this is happening, but not interested in putting on a position there. And then we can roll this over into Tuesday, where I'm using a similar process that we have a run on previous day high and then a weak close on Tuesday. That leads me into a one-sided framework where on Wednesday, I would be wanting to see these lows getting traded into. We go back down to the hourly. This is a run on a high, a change in state of delivery, weak close on Tuesday, looking for a Wednesday continuation. However, the confirmation piece and why this is so important did not align. This is not aligning with a bearish daily profile. It didn't offer an entry signature and it broke away to the upside, but we left behind failure swings off the lows. So I'm not going to trade this to the upside. Regardless, I didn't see this coming. This was, of course, that news event hit the market. These are the external factors that you can't anticipate. I'm going to allow Wednesday to close and then I'm going to roll over into Wednesday's trading. Let's take a walkthrough on this trade on YM. Now, I took this trade on YM and I'll explain why when I get to that point, but I always start my analysis for indices, this market on NQ and ES. This is where my favor always begins. It's the ones I'm likely going to be trading. So they're all really positioned the exact same way. We had a record-setting day on Wednesday. No one has seen a day like this before. So that initially sets a tone where I'm not really going into this following day with an established bias because I have not seen a day like this before. I don't know how price should follow up on it. So I'm not going to set an initial expectation. It's going to be more about how price develops around relevant levels where I know it matters, and then looking for added confirmations for me to actually see if I should execute and put on risk in this market. Now, when I'm getting to the charts early New York session, I can see that on previous day high, which is a relevant high to me in this context, we're going to mark that out. Price is engaging there. What is it doing at that point? And I can see going into the open, there is a potential run on previous day high, and we are starting that continuation to the downside. This here is the daily profile aligned with a relevant level, and I am reacting to this development. Now, that doesn't mean I immediately go in and take an entry, because I can notice here, if I'm going to even look to short this, I have this at the high. So CPI came through at 830. It looks so insignificant because the relative volatility that was going on, but I noticed that there is a failure swing to this high. So if we were to break down, I'm not going to be interested in selling in here. When I see this, I'm going to first go right to NQ. And if I go over to NQ here, there is that same problem where there's a failure swing to this high. That means if we break down lower, I'm not going to look to position in here because I'm unsure when this open comes through if we should then go up first to drop lower. So the development is not quite there and I cannot execute on this framework. But now if I move over to YM, and this is where it comes into play, where I have a narrative established and a framework on ES and NQ, but the structure is not quite there for me to execute. That's where I can move over to YM here, and I notice it's correlated in this context, and that's why I like to use it, because it's doing just about the same thing. There's going to be moments with YM where it is in its own world, and that's really where I'm not going to mess with it much. But here we have that same framework where we have a run on previous day high. I go down looking at that daily profile. But one thing you'll notice as the difference is, instead of that being a failure swing right before the open, CPI runs up and takes this short-term high. So now I can feel that this is an area that I can trade away from in the New York continuation. That may even offer me an entry. If we look down to the 5-minute, we have that run on a short-term high. This is what was lacking on ES and NQ. That run up paired with 830, this consecutive series of up close candles, that lowest opening price, we got a close below. This here is showing me that this high does not need to be traded back to. YM is offering the framework and is pointing in that same direction. So I took a positional entry in this candle here with a stop loss at this high because this is ran out. It does not need to return to this point, and I assume 930, when that hits the market, can begin that expansion away from the high. I did not take a full position on this because ES and NQ still had that failure swing above, so I'm being slightly conservative in my positioning, but nonetheless, I am getting onside here, and if the opportunity is given, I am going to scale in more, which we do have here. So positioning prior to the open, stop loss at this high, 930 comes through, continues price lower, and in the continuation, I expect opposing closed candles that are closed through to be respected and held on the way down. So we have breaking lower, a 5-minute clear up close candle, closing below that here. That offers a new opportunity to either one, trail my stop loss, or add to a new position where I am pyramiding my entry. My average was here before. I add slightly more down here. That moves my average to a new invalidation point, and then I am then expecting more of a continuation lower. We get that same thing occurring again. We can even view it on a 15-minute if I want. 15-minute up close candle, getting a close below. Go back to the 5-minute, closing here, coming back up into that area. I can then take another pyramid entry, trail that stop loss, moving my risk down to this high here, because I expect it to be held in the continuation if I think price should continue to go lower and there's more room on this trade. So I took another pyramid entry. Once it started breaking lower, now I am in a larger position without realizing the actual risk if it were to stop me out. So that is how I pyramided into this position. It continues to break lower, and now as it breaks, I'm not going to continue trailing my full position. I'm going to start scaling out of that. I want to be buying back into this weakness. So as it breaks lower, I'm buying back that position to realize the profit. That's where I'm going to get the best value on closing out this position. As it continues to break lower, I'm going to trail when necessary, but ultimately I'm looking to scale out because I've already built up that position. I just want to get my profit from this trade. As it breaks lower here, I'm going to continue doing that. And then ultimately I got trailed out down here on that final contract.
I give you the world, but there's other planets too, and I need someone to be patient with me, someone to get money with, not take it from me. They don't even need to be as famous as me. I don't think I meet them at the places I be, but deep down I think about you.
Here on Friday, I can already tell you that I am not going to have any trades on the day, and I can show you that based on how price is opening here. Basically, there are failure swings to both sides of the market, off the lows from previous day low and then the intraday highs up there. So if the market breaks in really either direction, I'm not going to have a framework, but I can go even a little bit deeper into this. If you take a look at that red line there, that's my invalidation point from the higher time frames for price to trade to the downside, or at least frame that idea. It's traded through that point, so that makes it less interesting for me. And at the same time, if I were to look at this to the upside, of course we have those failure swings down to previous day low. I would need something to trade off of previous day low to create that protected swing on either ES or NQ. And with it being that far below, and considering it's already past 930, that will not create a trade opportunity for me. Price would have to go all the way down to that level, so making a deep run. It would have to then give a reversal signature, a continuation signature, before I could even consider getting on side with this. At that point, it would probably be 12 o'clock or later, and that's just not the trade that I'm looking for. So the way that I view price is not in how can I predict and where this is going, but is it even possible for the market to give my setup from where it currently stands? And in this day, I can confidently say that it will not develop into anything that would create my setup. This is one of those things where I see a day like this, and once I can determine that my trade is not going to form, I am leaving it there. I don't care if the market trades 1,000 points. I don't care if it consolidates. I don't care if other people make money. I don't care if other people lose money. None of that is real to me. If I don't have my trade, then the rest of the day is invalid. So I'm not even gonna watch price at this point. I'm gonna go on with my day doing other things and not even worrying about what the market is doing. That's the type of mindset that keeps me really attached to my system. I truly, and in the most genuine way possible, do not care about anything else. If your system pays you, that's what you need to be focused on. If your system isn't being presented in the market, then you should not care about anything else. Just as an update of what I talked about this morning for why I'm not trading, there's nothing in the market for me. This is what the result has been so far. That is really unfavorable price action, not something that I'd ever look to trade. And this is the big point of avoiding unnecessary losses, not putting yourself in market conditions where there's no money to be made for your system. And this is really the ultimate goal, is my system is not putting me on side in a market like this. I am staying out when I would otherwise be losing, and that in turn is in a sense making me money. And then also when I go to take a winning trade, I'm not clawing myself out of a drawdown. I am actually realizing that profit because I did all that waiting in these unfavorable market conditions. That's really the big goal. It's hard to see in the moment, but when you look back at these things, avoiding this type of price action is everything.
Hello. hanging out.
It just brings everyone together a bit more. So the feedback on that is really positive.
Oh, it was very complicated, so like than what most people make it like seem.
One thing from this week that I wanted to get into a little bit more because it's so important is how I took my pyramid entries and just the logic behind doing this and why it's so powerful. Taking a look here, this is of course my trade on YM that I mentioned earlier in this video. This blue line is noting my average. So when I took this initial entry, this is where my average position was, and this red line is going to be noting my stop loss, which I trailed on the way down as this trade went on. Like I explained before, I didn't take this initial entry with my full standard risk because I was looking to add more as this became more confirmed and more convincing to me, and that's where the pyramiding comes in. So initial entry, initial stop loss, I'm going to fully commit to that idea. As it breaks lower in my favor, we get a new continuation signature. So we have this up close candle closed back through. That signature creates a new invalidation point in the continuation where I can trail my stop loss. So that would bring my stop loss down to this high. And when I add to that position, getting a full position size on, that brings my average just onto that swing point. So what you'll notice here is that because I got an initial entry and I'm taking a new entry in this continuation, trailing that stop loss to that new invalidation point, my average is at the new invalidation. So I'm in a full position size here where if I were to get stopped out at this point, it would be a smaller loss than any initial position I took full size. So that's great, but this trade is going to continue because I'm looking for it to go lower. Again, we have an up close candle formed, closing back below. As it came back up into that where I'm looking to get a better fill, I take a new sell position. I'm adding to that position before I even take anything off. That again bumps my average down right near that new invalidation point where I would be trailing my stop loss. So again, I have a larger position size on than I would normally have without increasing my risk in the case I were to get stopped out. So I have a large position. Even if this average is slightly below my trailed stop loss, this is a very small point range. That is not going to equate to my normal risk. So I'm in a large position here, still looking for that move lower. And as this breaks, I'm scaling back out. And that's why it shows my averages here, because once I start buying that back, my average is going to move down to this point here. And the big key with this is if I'm in a large position, I'm not going to continue trailing that stop loss really aggressively. I want to be taking good scales into that weakness because I'm going to get really good value on realizing the profit on this trade. And as you can see here, that's really that process that I'm following. As this trade is developing and not yet to fully play out, I'm building up that position without actually taking on more risk in the case I were to get stopped out. The one nuance with this is that the risk itself is not in the dollar amount you would lose because of course you're controlling that when doing pyramid entries. The real risk is that you could take a pyramid entry, let's say here, where you trail your stop loss, your average gets moved from that initial entry. And there's always that possibility where you trail that stop loss, this comes back up, runs you out, and then makes the move where if you took that initial entry up here, never moved that initial stop loss and let that play out, well, then you just missed out on a winning trade when if you never touched that position. That's the one risk with it. That's why you have to apply it in the right market conditions and doing it properly. So you can see when it's offered and works out in your favor, it's extremely beneficial and is going to set your winners up for really large opportunities. It's now Saturday and I'm going to do a little bit of reflection from this past week where I just want to write down a few things where if I look back on what I did, not really the outcomes, but certain decisions that I made, I'm going to be highlighting things that I did really well that I want to build on in the future. And then maybe some things that I missed out on or I actionably did that were negative, and I want to refine those out of either my process or my routine from this past week. So I don't go and write down everything, but these small specific things that I think are really important for myself to make sure that I'm always improving, I'm gonna put that in here because writing it out, or whether you're doing this or typing it somewhere, that really solidifies it in your mind versus just kind of reflecting mentally. That's still okay, and I think that's better than doing no reflection at all, but writing something down, the things that you think are very important to you, you should definitely be taking the time to do that. At least an hour on the weekend, look back on what you did. What can you do in this next week? Because the new week starts on the weekend. You're preparing for next week. What can you do now to make sure that you're going into the new week even better than you were before? So that's really the goal of this. And I can share a couple of things that I mentioned for myself. One, when it comes back to looking at things that I did right that I want to build on, that was similar to what I was doing with YM and pyramiding my winning trades. So I would say one of my strengths in trading is being conservative in my risk management when it's necessary and avoiding unnecessary losses. That's something I do very well because I'm naturally just a more patient person and move slowly. But one thing that really has an uncapped upside is how can you manage your winning trades and building up your winners, and that's really what you do through pyramiding, and I've always wanted to improve on that. So this week I got the chance to execute that, and now I'm going to be taking that into next week and every single week following that, trying to continue to build up that skill. The other ones on here are slightly less related to trading, but they're in my investments and then certain things that I do in my weekly process to be productive on good work. So, those are things that are probably a little bit more personal to me, but nonetheless, you get the idea of what you should be reflecting on because, whether it's something you're doing in your trading, of course, you want to note that, but also the way you're living your life outside of trading is going to reflect on your performance. So always note anything that you think is significant enough for you to write it down. It's going to help you. So with that all said, I'm going to finish this up here on the weekend, and that is everything I have for you in this video. So I hope you found it valuable, and I will see you in the next one.